Thank you, Leah, for such a fantastic presentation. Thank you. And thanks to Pastor Larry Olusheye and the entire team here at House on the Rock. In this maiden edition of Convergence, for which the theme is Positioning for Prosperity 2026 and beyond, my session is to focus on the strategy to unlock the next level of business expansion. And it speaks around three key constructs. The first one is on expanding your influence. The second one is on what it takes to access new markets. And the third one is what it takes to build at scale. You are 600 exceptional people that have built something, that have led something, that have survived something. That alone deserves acknowledgement, and I think it's okay to put our hands together for each other. Let me thank the organizers of Convergence 2026 for the privilege of this platform and for the thoughtfulness behind this theme, positioning for prosperity. I'm the son of a teacher, so please let me tell somebody positioning. Okay. It's about positioning. It's not about chasing prosperity. Prosperity is not actually what you chase. Prosperity, as Leah said, is an outcome. Leah spoke powerfully about operating at scale, about the decisions that sustain performance, and I think it's very difficult the way he put it to forget those three P's about process, about purpose, and about passion. What I want to do is to take the baton, and I've been taking that baton even before I was born. It's the Taiwo, so he handed over the baton to me. So today, I don't know whether Pastor Larry was aware, he's handed over the baton to me. But I want to run with that baton in a slightly different direction. Because before you can sustain scale, you need to first of all achieve the scale. And the path from where many of us might be today, which Pastor Larry spoke about when he opened the comments, it's a path where you are capable, you are established, but somewhere you may have plateaued. To where you are capable of going and you are working so hard to just make it happen. The challenge today is that it's not necessarily a part of what you work harder. It is a part of working it differently. Jeff Bezos once said that what is dangerous is not to evolve. Let me add to that and say that what is equally dangerous is to evolve only in your operations while you stay completely static in your thinking. You can upgrade your systems, you can upgrade your software, you can upgrade your staff, but still be fundamentally stuck because the strategic architecture in your mind has not moved. So on this note, let me ask, and I'd like you to engage with this as honestly as you can. 4 key questions. Number 1, when was the last time that your business did something for the first time? Number 2, when was the last time that you entered into a room where you were the least experienced person in that room? Number 3, when was the last time a deal that you made you to be very uncomfortable because of the scale of the ambition? Number 4, when was the last time that your strategy felt genuinely bold? If you are struggling to answer these questions, then welcome. This session is for you. I'd like to talk about 5 strategic insights in the course of this presentation. Strategic insight number 1, the plateau is not your problem. Your posture is. Can you please let me tell somebody, the plateau is not your problem. Your posture or your position is. Let me start with this diagnosis. Many of you are not stuck because your business is broken. You may be stuck because you are still operating with the same mindset with which you built that business, rather than the mindset that is needed to scale it. There is a specific kind of trap that comes with very competent people, and I like to call it the competence ceiling. With the competence ceiling, you got very good, really exceptionally good at a particular thing. Your market rewarded you for it. You refined that thing, you protected it, you built your identity around it, and then one day, the very thing that made you successful became the very thing limiting your growth. You stopped being a leader that was building a business, and you became a manager that was maintaining one. Steve Jobs he understood this tension very well. And he said, if you do something and it turns out to be pretty good, then you should go do something else wonderful. Don't dwell on it for too long. Just figure out what is the next thing. That's restlessness. That refusal to be imprisoned by your past success is the hallmark of every leader who has ever broken through a plateau. And the first strategic shift that I want to speak about today, or the first element in this strategic insight number 1, is how you make the move from being a manager to being a market maker. Who is a manager, and what does it do essentially? A manager optimizes what already exists. On the other hand, a market maker creates what doesn't yet exist. A manager asks, how do I do this better? A market maker asks, what should exist in this space that doesn't yet exist, and who is best positioned to build it? A manager's ceiling or plateau is the size of his current market. A market maker's ceiling is the size of their imagination, backed by strategy and execution. Please don't get me wrong. I'm not dismissing management. Great management is foundational. As Leye spoke eloquently to it earlier, but management alone will not get you to the next level of scale. You need a strategic identity shift. And that shift begins with a fundamental question. Are you running the business, or is the business running you? I came across a wonderful pitch a couple of months ago of a gentleman who spoke about what he called the Spark CEO and the Scale CEO. And he alluded to the point that the Spark CEO comes with certain compliments and graces that helps to get things off the ground. But most Spark CEO that never make the transition from being Spark to Scale get stuck in the ruts. The Spark CEO is more emotional, is more sentimental, because he knows what he went through to bequeath the business. But your Scale CEO is less sentimentally attached. He's thinking about processes, he's thinking about systems, he makes decisions purely on the merit of data, and is ready to move on. That plateau may be because you might still be operating as a Spark CEO, when what is required now is for you to scale. The late Dr. Miles Monroe said, and is a man on whose wisdom and purpose, potential, is a man that we continue to reference in wisdom. He says, the greatest tragedy in life is not death, but it's a life without purpose. And maybe I should adapt that to say the greatest tragedy in business is not failure, it's a business without a strategic direction. A business that is merely busy, a business that is active, but not advancing. Coincidentally, a number of business owners that I've encountered are talented, hardworking, successful, but unfortunately, they are hostages to their own operations. They cannot travel for 3 weeks without something breaking. They cannot step back without revenue dropping. They are not owners of a business. They are actually employees of a business they happen to have founded. Scale requires systems. Scale requires succession of thinking, not just succession of people. Scale requires you to extract and extricate yourself from the daily mechanics and invest that energy in the strategic direction, in the conversations, in the decisions, and positioning that only you as the leader can make. And that leads me in the concept of breaking through the plateau to one of the sayings that I love the most by a gentleman called James Clear. James Clear said, you don't rise to the level of your goals, you fall to the level of your systems. The first move to unlock your next level is not a market move, it's a personal move. It is deciding once and for all who you are going to be as a leader and reorganizing everything else around that decision. Strategic insight number 2, the discipline of expansion thinking. So now let's talk about markets. Let's move beyond us as individuals. Because when leaders make the personal shift, at times they may still lack the rigorous framework for thinking about where to grow. They expand in a very opportunistic way, chasing whatever deal appears, entering whatever market that invites them in, and then they wonder why growth feels chaotic rather than compounding. Expansion is not opportunity chasing. Expansion is a discipline. And in one of the quotes attributed to Peter Drucker, he said, the aim of marketing is to know and understand the customer so well that the product or service fits him and sells itself. Contextually, the aim of expansion thinking is to know the new market so well, its structure, its value flows, its human dynamics, that your entry feels inevitable rather than forced. And in dealing with this issue of expansion thinking, can I ask you to think of it along these 4 questions? Number 1, where is value migrating to in your market? Every industry has a value of value migration, a shift in where the real economic value is created and captured. Think about what happened in telecommunications. Value migrated from the hardware to the software platforms. Think about what is happening right now in the energy industry, where value is migrating from pure extraction to integrated services, from carbon-heavy assets to transition-resilient portfolios. Think about what is going on in the financial services portfolios, where value is migrating from transactional banking to embedded finance. Before you enter a new market, it's important to understand its value migration story. You don't want to enter a market that is declining, even if it looks attractive today. You want to position yourself at the destination of value migration, not at its origin. The second question that I'd like you to ask is, what's my transferable advantage? Not all advantages travel. Some competencies are deeply context-specific. They work brilliantly in your current market, but they become irrelevant elsewhere. Before expanding, can you be ruthlessly honest about what you are actually carrying? What do you have in terms of the capabilities, of the relationships, of the brand, of the brand trust, of data, of the operational know-how that gives you a specific advantage in the new market you are targeting, not just a general competence? If you cannot answer that question very clearly, you are not expanding, you are merely gambling. The third question I'd like you to ask as we deal with this second strategy shift is, what is your cost of being wrong? Good expansion thinking always includes the downside architecture. What happens if this market takes twice as long to yield returns as I've projected it? What happens if the key relationship that I'm anchoring this expansion on changes or exits? What's the maximum loss, whether it's financial, it's reputational, it's operational, that this move can expose me to? And is that loss survivable without putting the core at risk? Bold moves are necessary, reckless moves are not. The difference is, have you sufficiently dimensioned the downside? The fourth question is, what is your minimum viable entry? Now, one of the most costly mistakes I see growth stage business make in launching at full scale into a new market before is that they launch before they have validated their assumptions. They invest heavily, hire aggressively, they brand loudly, and then discover that the market is behaving differently from their projections. I remember a story told when MTN and Econet then were trying to come into Nigeria, when Nigeria was going to move away from Nitel and get into mobile telecommunications. And they were very unsure about the Nigerian market, because the way Nigerian market was profiled is that the per capita income and all of that will not make investment in cell phone viable. So they sent an advanced team. And I understand that when the advanced team landed in Lagos, as they call somebody, before the person gets into the conversation, they first of all ask, so how are you? Did you wake up this morning? How is your husband? How is mommy? Spend like about 3-4 minutes asking all the how. They say, so the reason why I called you, and they were taking notes, that these are people who are rooted in the culture of speaking and asking all kinds of questions. Our product we sell here. I had the privilege many years ago, about 15, 20 years ago, to speak, and I'll protect his name, a gentleman who runs the biggest event entertainment center in Ibadan. And he took my brother and I on a tour, and we're asking questions, and he said something that was very profound to me. He said, any business that you build that keys into the DNA and the culture of the people, you can't get it wrong. He said, the culture of our people is to do parties. And I understand that side so well. So all I've done is to create a business that is aligned with the culture, with the DNA, and makes it such that there is always a demand. And he has scaled it. You know, he scaled it to the point where when people want to choose either wedding date or date of burial, before they go to the church to choose which date is available, they go to the event center to find out which date has not been taken up. And I'm not talking about people found, when people couldn't find weekends that were free, they started going to weekdays. So people go to Pastor Larry and say, Pastor Larry, we want to get married. And Pastor Larry says, so when is it? Say, please, hold on. Let's go and find out. What is the minimum viable entry? The philosophy that says you ship early, you learn fast, you iterate, is the engine of intelligent expansion. And expansion thinking at its best is a series of calibrated experiments that increase in commitment as your evidence accumulates. What we must do in breaking the plateau, what we must do in the discipline of expansion thinking, is to find the smallest, fastest, cheapest way to test our thesis in the new market. Get the real data, adjust, and then scale. These 4 questions: where is value migrating to? What is my transferable advantage? What is the cost of being wrong? What is the minimum viable entry? We save you from some of the most common and most expensive expansion mistakes. Let me talk about strategic insight number 3. And it has to do with influence. It has to do with networks. I like to talk about this as something that doesn't often make it to the headlines around markets and expansion, and is the place of influence. And when I say influence, I'm not speaking about popularity. I'm not speaking about profile. I'm not speaking about follower counts. I mean strategic influence. The kind that opens markets. The kind that attracts capital. The kind that activates partnerships and shapes the conditions in which your business operates. Here's the uncomfortable but necessary truth. Your growth ceiling is largely determined by the rooms you are in. The deals that will transform your business in the next 5 years will not come from your website. They not necessarily come from your website. And they will not come from a cold email campaign. But they will come largely from the room that you have chosen to be in, to the conversations you have chosen to be part of, or from the relationship that you invested in years before you needed it. Let me refine it a bit more. It is not just the size of your network that is important when we speak about the issue of influence. It's the quality, it's the intentionality, and the depth of that network. 5 relationships with the right people, cultivated with genuine investment over time, are worth infinitely more than 500 LinkedIn connections you never had a real conversation with. Let me be specific about what building strategic influence actually looks like. The deals that you make signal your market position. Every partnership, every acquisition, every significant commercial agreement is not just a financial transaction. It is a statement to the market about who you are, what you stand for, and what league you are competing in. So it's important to choose your deals, not just for the immediate financial yield, but for the strategic signaling that they portend. Some deals are worth doing at lower margins because of what they communicate about your capabilities and your ambitions. Can I also say that the relationships that you cultivate define your success? There's a category of relationship that most people underinvest in. Relationships that have no immediate commercial utility. Relationships in mentors, relationships in peer networks, industry bodies, regulators, policy, communities. These relationships feel unproductive until they become decisive. You must build them before you need them. You must invest in them without agenda. You must show up consistently, not just when you want something. I have had the privilege of changing careers about 5 or 6 times now. I've lost count. The truth is that I only applied for 1 of those 5. All the others were outcome of relationships that are developed and generated over time, invested in over time, not because I knew that something was coming, but because I felt it was good to build relationship. The current job that I'm sitting on today, by the special grace of God, I wasn't even aware there was a vacancy. There was a gentleman that each time he needed to take strategic decisions around gas investments and economic analysis, he consults me. And I love him to bits. I never charge a dime. I never did. And at times I'll be behind my screen working on models till 1 a.m. just to be able to give strategic insights to him. Long story short, he was the one that became aware that there was a vacancy. He was the one that pointed and said, as you are looking for candidates, that guy, I think he can be one of the candidates. And then I ended up, but I still went through the process. But the point is this: build those relationships before you need them. And don't be transactional about them. Build them because it's great to build relationships. Because there's a power of compounding that goes further beyond your own efforts, that builds on the velocity of the collective and can take you much further than you can be. The room sets your ambitions. There's a powerful psychological dynamic that most people do not talk about openly. The rooms you spend time in recalibrate your sense of what is normal and what is possible and what is expected of you. If you spend all your time in a room where a 500 million naira business is considered exceptional, you will recalibrate your ambitions accordingly. If you spend time in rooms where people are building 50 billion naira businesses, your sense of what is achievable shifts, not by motivation alone, but by proximity to the evidence. And there's a profound principle in the scriptures that echoes this in Proverbs chapter 27, verse 17. It says, iron sharpens iron, and the countenance of a man, that of his friend. You cannot be sharpened in isolation. You are sharpened by proximity to people whose edge challenges you. Deliberately seek rooms that stretch your frame of reference. Attend conferences like Convergence, and those that are above your current level. Join networks that include people operating at the scale you aspire to. Not to pretend to be something you are not, but to normalize in your own mind what you are capable of becoming. Strategic influence is not built in a quarter. It's built in years. But every room you enter, every relationship you invest in, every deal you make, is either expanding or contracting your ceiling. Nothing is neutral. The fourth strategic shift that I'd like to speak to is around what capital and partners are actually looking for as you want to scale. Let me speak directly to those of you here who are thinking about capital raising or strategic partnerships as part of your next phase. Because there is often a significant gap between what business owners think investors and partners want and what they actually want. The conversation in many boardrooms seems like this: if only I had more capital, I would grow. And sometimes that is true, but more often, what the business actually needs is not more capital, it is more clarity, it is more structure, it is more evidence of scalability. Michael Morris of Sequoia Capital, one of the most successful venture investors in history, said, "We are looking for missionaries, not mercenaries." And I'd like you to think about that. Investors are not simply looking for smart people chasing money. They are looking for people who are called for a specific mission, who have such a deep conviction about what they are building that no obstacle will derail them. Conviction is investable. Opportunism is not. And here are 4 key things that capital, investors, and strategic partners are looking for. Number 1, they are looking for a business that can survive the founder. This is the single most important reason growth stage businesses fail to attract institutional capital. The business is deep, is structurally dependent on one person. Remove that person, and the revenue, the relationships, and the decision-making capacity will collapse. Institutional investors, especially private equity firms, development finance, strategic partners, need to invest in a system, not in a person. If you are the business, rather than the architect of the business, you are not yet fundable at serious scale. Andrew Carnegie, who built one of the greatest industrial empires in American history, said, "No man will make a great leader who wants to do it all himself or get the credit by himself for doing it." The business that scales is the one where leadership is distributed, where systems are documented, and talent is developed at every level. The second thing that they are looking for is the proof of concept, not just the potential. Let's speak eloquently about ambition. And without the fuel of ambition, we can't go anywhere. But ambition is not lacking in many of us. What is lacking is the evidence. What makes a business fundable for the next growth is not the quality of the pitch, it's the quality of the proof. Show me a market entry that worked. Show me a new product that gained traction. Show me a team that delivered without you. Show me a unit economic story that holds under scrutiny. You have an opportunity to be funded. Investors fund demonstrated capability at small scale, expecting it to replicate at large scale. And as the parable of the talents in Matthew chapter 25 teaches us, the master entrusted more to those who have proved faithful with what they were first given. That is a capital allocation principle as much as it is a spiritual truth. Faithfulness in small things is the prerequisite for stewardship of large things. Number 3, partners, capitals are looking for intellectual honesty about risk. Nothing destroys credibility in an investor conversation faster than a founder who has no articulate answer to downside the scenarios. Sophisticated capital is not looking for a risk-free business because truly that doesn't exist. They are looking for a leadership team that has clearly identified the real risks, that has a plan to manage them, and will not be paralyzed or in denial when things do not go according to plan. So when you walk into a room to raise capital or to negotiate a strategic partnership, please don't perform optimism. Perform informed confidence. There's a big difference between them. The fourth thing that capital and investors are looking for is that they are looking for an alignment between vision and values. The wrong capital partner can reshape your culture, can distort your strategy, and can compromise your long-term vision. Amos tells us and asks us very strongly, is it possible for two people to work together except they agree? Before you sign an agreement with anybody on a journey, you must ask certain questions. Do we agree on where we are going? Do we agree on how we will behave when things get hard? Do we agree on what winning looks like? If the answer to any of these questions is uncertain, pause. The cost of the wrong partner almost always exceeds the cost of no partner. I read the story of a successful deal maker, businessman, and one of his secrets of success is that before he signs an agreement, he goes with you on a round of golf. And he observes you as you are playing. He observes the potential partner he has not played with or he has not signed a contract with who would adjust the score. He observes the guy when he gets to where the ball is and he's not lying well, he uses his leg to adjust. The alignment between vision and values is very powerful. I'm rounding up now. I'm rounding up. This is my first time rounding up. By the special grace of God, I work for, no, sorry, forgive me before I come here. The fifth strategic shift, and this is not the fifth one. The fifth strategic shift, let's spoke so eloquently about it. It's on the divine partnership. And I'm saying it now not as an afterthought. It's not an afterthought. I'm saying it because it's actually the glue that holds everything together. We're talking about preparing for prosperity going forward. But Proverbs chapter 21, verse 31 tells us that the horse is prepared, preparation, right, for the day of battle. But victory belongs to God. We can do the strategic mindset shifts. We can go through the routines of discipline of expansion thinking. We can look at the strategic influence angle. We can understand and walk the channels of what capital and partners are looking for. But at the end of the day, the ultimate dispenser of progress that breaks that plateau is God. And let me stand on the protocol of what Leah said earlier on this particular issue. So by the special grace of God, I am today holding the reign of a company that epitomizes what we've been speaking about. The company is called Haradel. It's an NGX-listed company in the energy space. And that's the story that I want to round up with. Because sometimes the most powerful strategy lesson is not about framework. It's about looking into an example. This is a company that started by people like you and I. This is a company that is 34 years old. Many people know about it today. But again, as Leah said earlier on, there is a 40-year like Captain Stoltenberg or whatever that has been, in the background. And success and breakthrough is never a microwave experience. It's a compounding of series of decisions taken in the right direction. And they had belief, they had ambition, they had courage that at a season when they stepped out, they could replicate what used to be the exclusive preserve of international oil companies, but as independent, local, and indigenous players. In that journey, they had created over time multiple firsts that were never heard of. They did not operate by rules. They created the rules as they went on. I'm not sure they had the dream that the company would be where it is today. At the time when I took over, which was a little about 5 years ago, the very first thing that shareholders, and they have been loyal shareholders, said to me and the board is that you need to take us to the market. And then I understood that when the company started 32 years ago and they were going in the street handing forms over to people, they made a promise to everybody and they said, we're going to democratize access and ownership of upstream company. It will be a company that is not owned by one single person, but is owned by everybody from all walks of life. And we went through that journey, building skill, building capacity, building competence, running an efficient business. And by God's grace, sometimes in 2024, October 14 specifically, we got listed on the floor of the Nigerian Stock Exchange. And somebody asked me, how do you feel? And I said, for me, it was a promise made, it's a promise kept. But that took about 30 years to get to that point. I think it's a journey about taking the long shot. It's a journey of ambition. And it's a journey that calls us to aspire to the point of audacity. In this environment where we work, to build at serious scale, you cannot import a generic playbook from Houston or London and expect it to work. You have to develop a different kind of strategic intelligence, one that is deeply embedded in the context of where you are, one that is built on relationships, that takes years to earn, and operationalized by teams that understand not just the technical requirements, but the human realities of the communities in which you operate. As I round up, no, let me go and round up very quickly now. I know you came into this room this morning as someone who has already built something, and something that is meaningful. That is not a small thing. In a continent where the barriers to business building are very real, you have demonstrated capability, resilience, and commitment that puts you in a very specific category of persons. But I want to challenge you as you leave this room at some point today to hold that success lightly enough to ask these 4 questions. Number 1, am I building or am I maintaining? Are the markets I'm in the markets that reflect my full potential, or just the markets I happen to start in? To ask the questions, the rooms that I'm in, the relationships that I'm investing in, the deals that I'm making, are they expanding my ceiling or are they just confirming it? To ask, what would I do differently if I genuinely believe that a business 10 times the size of what I have today was possible and legitimate for someone with my background, my experience, and my capabilities? Because that belief, that is legitimate. That it is for people like you, it is not a small thing. Many capable people never reach their potential, not because of lack of skill or lack of opportunity, but because of an unconscious belief that a certain scale of success belongs to somebody else. It does not. It belongs to whoever is most prepared, most strategic, and most intentional about claiming it. The prosperity that you have been planning for is not accidental, it's not arbitrary. You must position for it. You must be prepared for it. You must pursue it with intentionality and discipline and the kind of strategic boldness that this conference was designed to ignite. The market is not waiting for the most talented person, it's waiting for the most positioned person. And can I challenge you today? Position yourself by way of preparation. The next level is not out there waiting to be found. It is waiting to be built by you with intentionality, strategic discipline, the right relationships, and the courage to move differently. I trust that by the time you leave this conference today, prosperity will know exactly where to find you. Thank you very much.